Okay, good morning and welcome everybody. Welcome to the Juneteenth Homeownership Workshop titled Black Roots and Black Resilience and Black Real Estate. This is as you know, Juneteenth is coming up this Friday. It is a very historical moment, and we wanted to thank the state of Illinois, led by Markel Tolliver and the Department of Commerce and Economic Opportunity and the Office of Minority and Economic Empowerment for putting this workshop together. We have some esteemed panelists, and before we go out of the room, we'll go ahead and bring in Markel Tolliver to speak about this particular historic opportunity to discuss Black home ownership and some of the services that the state offers.
Thank you so much, Dr. T, and thank you again, everyone, for joining, and to our panelists, thank you again for your collaboration. Happy Juneteenth to all of you. And again, knowing that home ownership is important, and June is National Home Ownership Month, and understanding the importance of equity and building upon Black wealth in terms of home ownership. So we have some, again, esteemed panelists here to kind of talk throughout the state about their programs and different opportunities that we at OE3 kind of support and help to connect with in terms of lending, in terms of brokers and real estate in general. And so again, we're excited to talk about this historic moment of June when the Obama Center is coming alive and being open in Chicago this weekend. So again, building upon Black culture and Black wealth. So again, thank you all for joining. And we'll be able to talk and connect a little bit more in the questions and answer section later on after the panelists. Thank you.
Thank you, Markel. And so for those who don't know, I'm Dr. Terrence Duncan. I am the president of MOP Capital Advisors, a firm that specializes on business finance, insurance, and also on business consulting, and also the president of the Metro East Realtors Collective, which is a chapter of the National Association of Real Estate Brokers. And so as we are talking about historical moments, let us go ahead and take a second to reflect on the National Association of Real Estate Brokers, who is the oldest Black professional trade organization established in 1947 with the philosophy of promoting democracy and housing. NARAB was created at a time where Black realtors that had limited access to tools and resources. And ever since its inception in Tampa of 1947, we have expanded to over 100 chapters and over 18,000 members throughout the country. The state of Illinois is fortunate to have several chapters that resides in the state, in Chicagoland, as well as the Metro East region where I reside. And so we are fortunate to start the introductions by having Siobhan Robinson of Chicago Realty. She is the NARAB Regional Vice President in the Chicagoland area. And if I can remember correctly, Wisconsin, correct, Siobhan?
Yes, Wisconsin, Iowa, and Minnesota.
Minnesota. Cool.
Yes,
Awesome.
yes.
Thank you. And so again, we focus on home ownership, but we also look at economic empowerment and stuff because our homeowners are also business owners as well too. So for those who are wondering how does this dovetail into this particular conversation, it's because we know that Black homeownership rates are at the lowest. Prior to even before there was discrimination, there was more Black homeowners prior to 1965 than it is today, and those numbers continue to decline. Next, we go to Andrea Husman, who is also a regional vice president. Her territory spans not only the Metro East, but also St. Louis, Missouri, Oklahoma City, Tulsa,
Little Rock,
Little Rock, Arkansas,
Kansas City, Missouri.
Kansas City, Missouri. Yes. So, Andrea, thank you for coming on board, and just a quick introduction and say hello about yourself.
Well, good morning to everyone. Very honored to be a part of this board this morning. Excited about us celebrating Juneteenth in this manner. I am also the broker and owner of Haywood Husman Realty. I provide real estate services, both commercial and residential, on both the Illinois side, the Missouri side, and also the state of Kansas. So I've been in the industry now, telling my age a little bit, 41 years.
Thank you. And also, we want to bring into the conversation one of our sponsors for the Metro East Realtors Collective, Dave Toby, FCB Banks. Their footprint is in the Illinois region. And Dave, if you don't mind introducing yourself and talking about the services and offerings that you provide.
Thank you. Dave Toby with FCB Banks. I head up the CRA fair lending departments within the bank while also being a lender. We are a community bank with that services the St. Louis MSA. We have 14 locations on the Illinois side and 3 locations on the Missouri side. We're a family-owned bank since 1901, and we're what I like to say a small big bank. Or a large bank because we are very rooted in our communities. We roll up our sleeves and we partner with organizations like the Metro East Real Estate Collective, the Federal Home Loan Bank of Chicago, different organizations that we see value to promote home ownership and especially Black home ownership. So I'm encouraging and looking forward to today's conversation.
All right, thank you, sir. Next, we on the list, we have is Pam on the call? Yeah, Pam Stallin. She's the Vice President of Housing and Financial Empowerment for the Chicago Urban League. Chi-Town's in the house. Welcome.
Thank you. Thank
Please
you so
introduce.
much. Yes, I'm Vice President of Housing and Financial Empowerment Center. We are a HUD-approved housing counseling agency, and we provide counseling as well as one-on-one sessions regarding rental, credit budget and savings, home ownership, and then there's post-purchase, and we are encouraging people to join our wealth building session, and that is where we look and talk about TODI, so that's transfer on death instruments. Then we're looking at estate planning, so we're expanding our services in order to help create wealth. So it's not just home ownership, because once we get you in that, we want to keep you in that home.
Absolutely. Thank you, Pam. Next, we're going to go to David Gillian from the Illinois Department of Housing Authority. David, welcome to the panel, and please introduce yourself.
Thank you so much. My name is David Gilliam. I'm an account manager at IDA, and we offer so many different programs that assist in affordable housing across the state of Illinois. So we have down payment and closing cost assistance programs, and we have other departments that help with multifamily projects and other assistance within homeownership and rental assistance. So I'm happy to be here, and thanks for allowing me to join.
All right, thank you, sir. I appreciate it. Last on our panel, we're going to introduce Derek Washington with USA Mortgage, a mortgage loan originator. He's a mortgage loan originator. Derek, USA Mortgage also is not only a sponsor of the Metro East Realtors Collective, but USA Mortgage is also a sponsor of numerous NARAB chapters across the country. So Derek, please introduce yourself and welcome.
Good morning. Good morning, everybody. Glad to be here. Thank you for having me here. So yes, I've been with USA Mortgage since 2014. I've been in the mortgage industry. I don't want to age myself, Andriel, since 2002. But I originally grew up in Chicago, so I do have roots in Illinois. I'm very excited to be here and been helping out people with mortgages and home buying education for quite some time now.
Right, thank you. And so one thing, before we go into the panel questions for all the panelists, and there will be 2, something I read today was really interesting. And it was, I can't remember the source of the article, but they was talking about the state of housing. It was a Harvard study, and they talked about the challenges of home ownership and just saying how the market is really struggling right now. And, you know, this panel could not be any more timelier because of the fact they said that when it comes to you know, homes that are homeowners and renters that are cost burden, meaning that they're paying over a certain threshold for, you know, housing or rent. The African-American population and Hispanic population are at least 35% and higher. In the state of Illinois, it's 37% for cost burden homeowners and 29% for renters. And that just really reflects just really some of the challenges we look at towards home ownership. And so again, you know, as we look at Juneteenth and we're talking about celebrating our freedoms, we also need to continue to focus our conversation on economic freedoms, you know, as we're going to do today in this particular panel. So the first question that I would like to ask for all the panelists is in a historical context. If Juneteenth represents freedom and self-determination, home ownership is often described the same way. So how do each of you see the connection between Juneteenth's legacy and today's fight for equitable access to home ownership? And if anybody wants to go ahead and start off, they're more than welcome to do so.
I can. So basically, Juneteenth marks the moment freedom was announced, but real freedom requires economic foundation. Home ownership is that foundation. Emancipation gave us freedom on paper, but land, wealth, access to capital, that freedom had no infrastructure behind it. So that wealth gap is still playing out today. Equitable home ownership access is still, we have to close that gap. And home ownership is, to me, the number one wealth building tool available to minority families. So when Black families are systematically locked out of it through redlining, discrimination, predatory lending, there's a threat to that wealth gap, and it can compound over generations. So
Here in Chicago Urban League, try to close that wealth gap by educating our consumers, especially our Black in our Black community. So not only creating that atmosphere or having that accessibility to home buying education courses. One of the reasons why we expanded our services is to once we help them get into a home, help them try to keep the home. We do know that resources have and are drying up. So education would be the key as to how we're going to try to close that wealth gap. We know that, wages are not going up as fast as housing costs and other services are going up. But what we can do is to teach one and teach each other on how uh, to save what we have. And that just being simply as budgeting. I know everybody here budgeting. Oh, I know how to budget, or oh, I can budget, or I don't have enough to budget. I just spend what I have. But if we really just get down to the basics, we can perhaps try to close that wealth gap.
Anybody else would like to chime in, or we can move to the next question?
I would actually take the words. I mean, we've already talked about access, accessibility, the damages that they have impacted us as relates to home ownership with the redlining. But Juneteenth is about freedom. I mean, that's point blank. And we look at the economic independence, you look at freedom, and you look at generational wealth when it comes to Juneteenth. And so when we take the two and put them together, that's where we look at them colliding or being one and the same in regards to us growing and being able to have our own and have something that we bring out and have an opportunity for others as they move forward in life.
And I just wanted to chime in and say, yes, Juneteenth is about freedom, but it's also, we have to work on the mindset of our people. So you hear the word freedom, but we have to make sure that we instill in them the mindset that it's okay to be free. It's okay to pursue home ownership. And that comes into accessibility, education, and things of that nature that a lot of us, sometimes we think about it, but we really just don't know how to obtain it. And we don't think we can. So we have to work on a mindset as well.
Absolutely. Well, the next question is going to be again open to all panelists before we go to individual questions. This will cover barriers and progress. So this webinar will highlight the ongoing journey towards equitable access to home ownership. But what do you believe is the most persistent barrier facing Black homeowners today, and what progress do you feel gives you hope? Oh, David, can't hear you. You're on mute.
Sorry about that. I would like to start off by saying one of the barriers of homeownership is the down payment. Saving for that down payment is a challenge for so many households. So one of the things that we offer is down payment and closing cost assistance programs that are available. So other than the challenge of overcoming credit challenges, homeownership is one of those challenges that is definitely there. And we try to reach out to all of the segments of the communities that we serve. So that is definitely one of the challenges.
I think another challenge is the misconception of what it takes to become a homeowner. So there needs to be a very systematic approach to how we educate and make Blacks aware that they are able to buy a home. and get that word out there. And we'll talk later about why there are some of those barriers, but breaking down those barriers and making everyone aware that home ownership is possible in those communities.
I think just to tie into that too, historically, generational wealth typically meant less down payment, thinner credit history, fewer financial safety nets. We also had a lot of predatory lending and financial exclusion, which really slowed down Black home ownership. That kind of actively stripped the wealth that they'd been given. So also appraisal bias, I think, is a real and documented thing. Black-owned homes in Black neighborhood communities, they're undervalued, and it really suppresses equity growth.
I'm gonna go ahead and comment myself, even though I'm not a panelist. I think a lot of it also too is misinformation and also fear. Misinformation, because a lot of times, unfortunately, when it comes to the Black African American population, a lot of us get our information off the internet or social media. A lot of things are being quoted off of what's said off of social media. People are looking for get quick fixes, like fixing a credit or, whatever the case may be. And you're also seeing this trend now where you're seeing people that don't worry about buying a house, invest in the market, but pay rent. And so that's kind of like really a paradox because of the fact that owning a home will be lower. Your monthly cost will be lower paying a mortgage than it would be paying a rent. So in theory, you would have more money to invest into the market. And so you have that. And then the fear component, because there's been a lot of mistrust in the community and a lot of social institutions and financial institutions. You have a lot of people that are fearful for coming out to, things such as maybe a home buyer workshop. And so one thing that I advocate with our particular chapter is to make sure that we're meeting people where they are and where they're going to congregate, because by doing so, you will get more people that, because we're going to be there in proximity, people will be more inquisitive, and you might get more of a natural referral where you set up a home buyer workshop and that person feels like, to what Dave said, they may fear that they don't qualify or that it's not for them. And so meeting people where they are. We did an event this past weekend in Alton, and we had 25 people, 25 points of contact. But if we do a homeowner workshop, like we're gonna do next week, we'll probably get 6 people that's going to show up, right? So meeting people where they are is really important because that education piece is really powerful. So thank you, panelists, for your responses. Unless somebody else wants to add on to that, we can go ahead and move to the next question. Okay. Seeing none. So Dave, the first question is to you. This is on the lending landscape. So from a banker perspective, what changes in lending practices or underwriting standards are helping or hindering equitable access to mortgages for Black borrowers?
Well, we're going to start here, and we're not going to get political, but with the political landscape, we have seen a lot of shifts that are affecting Black home ownership. And so as a financial institution, we have to become more creative of how we still provide the same programs that we have been offering, but we tailor them to meet what the political landscape is of that day. So we have to be flexible. We have to educate. We have to look at the low to moderate income tracks now, rather than looking at, trying to focus on majority minority. We have to look at the low to moderate, which historically, a lot of the majority minority tracks are also low to moderate, not all, but the majority of them are. So we have to focus our attention onto those to still be able to meet the needs that we need to meet in the communities. Some of the guidelines, we are written for mainstream. I will take one of them is, when underwriting, they want to see mainstream bank accounts. They want to see them at financial institution, and the minority population often do not utilize mainstream financials. They work with Chime, they work with Venmo, they work with alternative financial systems. And so we have to educate and get populations to understand that, for traditional Fannie, Freddie Mac type of financing, a mainstream finance institutions is what they need to be utilizing, rather than utilizing an all cash system or utilizing those alternative sources. But But then the banks also, I feel, have a requirement to develop products that potentially utilize and give credit for those type of accounts. We have portfolio programs that look at alternative credit rather than looking at a credit score. We will underwrite based on who you pay, how you pay, rather than what a credit score is. So, banks I think, have a responsibility to develop these products to get Black home ownership in their communities. Might not be through a traditional Fannie or Freddie program, but to still develop programs that allow that to occur. And one of the ways is to look at alternative credit or to look at alternative financial accounts, and being creative in that underwriting.
All right, thank you. That's a really good point that you brought up, especially with the fintech apps. You see a lot of people using that. Somebody that subs in one of my businesses, is texting me right now about, getting where her check is for her services. And I've always encouraged her to get a regular checking account so I can Zelle or Venmo her the money. And you're having this type of delay. So the resistance for going to whatever the institution she is to go to a mainstream continues to persist. And so that's really timely for you to say that. Which leads to the second.
And just a simple requirement of, a lot of those fintech sources, they don't provide a statement that's acceptable to Fannie and Freddie, because Fannie and Freddie require an address, requires an account number, requires, a formalized statement. And a lot of times all they can get downloaded is a screenshot or an Excel CSV file, which has none of the requirements that are needed. So then we have to become creative in how we can utilize and still get that to work. And then a lot of these buy now, pay laters, are not reporting on the credit bureau, but they do show up on a bank statement. In today's economy, where prices are high, people are utilizing these buy now, pay later. And then we see these recurring payments on bank statements. And so then we have to figure out, is that an additional debt that's not disclosed, and how do we go around that?
Thank you. Second question for you, sir. Trust and transparency. Many Black families carry generational distrust of financial institutions. So what are banks doing today to help rebuild the trust and ensure transparency in the mortgage process?
Well, I can speak to what our bank is doing and what community banks are doing in the St. Louis MSA, and that is we are getting into the communities. First of all, that starts with hiring staff that is minority, making sure that our bank staff looks like the communities that we are serving. It also is meeting them where they need to be. So showing up at education fairs, showing up at homeownership workshops, showing up at housing fairs. We need to be where they are. And the banks are doing that by building partnerships with like the Urban League. We have a partnership with the Urban League of St. Louis, the Urban League of Fairview Heights. And to your point, Dr. T, we did a home buyer workshop 2 weeks ago, and we had one person show up to that. But I'm encouraged because it was great conversation that we had with that one individual. So I feel like we did make an impact because we did impact one person. But it was sad that, we had done the advertising, we done the promoting, and we ended up with one person. But the banks are to build partnerships. So like I said, with the Urban League, with the Metro East Real Estate Collective, getting involved in the organizations that are serving the populations of the minorities so we can build the trust, because there is a lot of mistrust, and it's generational trust that has happened. It's not just the first level, it's going back to grandpas and parents. And so it's having to break down all those barriers and say, yes, you have had a bad experience. And yes, history is stating that, there were some pretty horrible things that occurred, but there are people today that are trying to rebuild and trying to build that trust and get you to home ownership. So it's through partnerships, it's through creativeness on the bank side, and it's showing up in the communities where the minorities are.
Great stuff. Thank you for your share. We're going to go ahead for the sake of time and move to the next panelist, Siobhan Robinson, real estate broker from Chicago Mobile Realty and Regional Vice President of, I think Region 9. Yeah, Region 9.
Yes.
Yes. So the first question for you, ma'am, is on market navigation. So as a broker working directly with buyers, what are some of the biggest challenges Black families face when navigating today's competitive housing market?
I think one of the biggest challenges is affordability, affordability access. So down payment. So that's a big challenge. Like it's a lot of people, like I said earlier, that want to purchase a home, but they just don't have the down payment. They don't have the funds. And a lot of times they don't even know how to stack them or pool resources, or we have somebody to reach out to help us with this down payment. Chicago is really big for promoting programs. We just had one that just went crazy called the Homegrown program, and they telling people $70,000 in grant money. So when our people hear something like this, $70,000 in grant money, they go crazy. What they don't know is that you need a 38% DTI. And we know our people, unfortunately, that is a hard thing to reach. It is a great buyer. Who wouldn't want the 38%, because they are setting them up, and I understand the concept. You're setting them up for success, but we know already when the FHA product was out with that 47, and maybe they can push it to 49, depending on the things going on, it was already a challenge. So you can only imagine the 38%. Granted, everybody has signed up. It is now closed. And I mean, this was released less than a week. It is closed. People are signing up for it. They don't even know if they qualify. They just heard $70,000 and ran with it. Don't understand what that really entails. So even though we hear about these grants, I think people just don't know what everything is. Education is key. So that's a barrier, because you hear these numbers and nobody is really telling you the background. They just hear the noise loud and don't understand the background of how these things are acquired. So I think the first thing is that we need to properly educate our people on what it looks like, what they really need to do. Even going back to Dave, when they said that our people don't even have traditional bank accounts. People just don't understand what it takes. And sometimes we get in these home buyer seminars, and we really got to get down to the nitty and gritty and explain what it is versus just giving these bullet points. And people say, you do this and do that. No, let's get to the nitty gritty, that if you have a car note, if you have a student loan, if you have these pay later, people need to understand what we're talking about, and we're just not talking, if that makes sense.
Absolutely. It's a really good point too. Especially when it comes to debt to income ratio, and just, spend, just a little side commentary. When you look at what happened in the pandemic, our behaviors collectively as a people, our spending behaviors and consumption behaviors is leading to some of the problems that we have today. The lack of budget and maintaining a budget during the pandemic when there was more money available. Now you're having a lot of people trying to pay credit card bills, and those credit card interest rates are hovering at close to 30%, which is similar to what it was like in the Great Recession.
We assuming that people even have bank accounts. It's unfortunate.
People have bank accounts. Yeah.
Right. We got to go back to the basic. It used to be initiatives about opening a bank account. A lot of people don't have bank accounts. They don't trust banks. So that is a big thing. We have to get, unfortunately, back to the basic. It used to be initiatives, open a bank account. You don't even hear about that anymore, but it's extremely important. Even for getting your earnest money in, where you go to your bank account, when you turn in your documentation, they say, well, I need to see you pulled it from your bank account. So it's just a lot of things that our people are just not educated about.
So that's really unfortunate. Hopefully we'll continue to lead the way in creating a change. The second question to you, is Robinson, is representation matters. How does representation in real estate, like having Black brokers, agents, appraisals, and advocates, shape outcomes for our home buyers?
I think one, the best way we can relate to our people is that we've experienced some of these things, right? Like I usually walk into rooms, I'm not able to relate to people because I'm not somebody that somebody taught me, so I had to teach myself. And so it's my goal. And this is one of the reasons why I'm part of NARAB, is because I wanted to become part of the change. I didn't want to just speak about it. I wanted to become part of it. So what I do is I step in rooms and I tell people my experience and what I use to acquire home ownership. And so that is the biggest thing, is that in order for us to be successful in this business, and this is why we got in the business, is that we can hold hands and educate our people so they can create the legacy and generational wealth. And generational wealth can stem from stocks to property, to investments, any type of thing. But the whole thing is that I want to go in and step in the rooms and make sure people are hearing what I'm saying. And I'm speaking from experience and not just speaking.
Absolutely, absolutely. Just to add to that point, I know Derek had hit on this earlier. The lack of black appraisals is really alarming. Appraisers is alarming because I think that and Dave and I was on a panel last week, and I think I said like 0.7% of appraisers are African American. So when you're talking about equity values and things like that, representation does matter in a lot of ways. And there's also opportunities too. So if we're looking at economic empowerment, one of the things that we do at NARAB is also encourage people to go beyond just being an agent that sells and buys homes. There are other opportunities in real estate that could provide empowerment, pathways to generational wealth, and also to home ownership too. So we definitely want to encourage that, and with such as development and contracting, that's other areas too where you're seeing a lot of underrepresentation.
And they're changing the guidelines with some of the guidelines with appraisal. So now they're trying to open it up for us, the black and browns, but also they're trying to include, the unfinished, the finished, above grade and below grade. So that's something that should be being released soon as well. So we can get more value for our homes and it's not just giving the incorrect value. So we are working. It's taking some time, but we are working.
Absolutely. And before we actually shift over to Andrea, just real quick, would you mind explaining to the audience who may not know what DTI is and how it's calculated and how it impacts, the ability to get a home?
Well, the debt to income ratio, I'll let a lender explain it. I'm not a lender and I don't want to kind of misspeak, and you guys can really get in depth with that. But you can explain that 38% that all of my people have ran and got. I just went to a home buyer seminar yesterday and we did have almost 200 people in the room, because when you hit 70,000, everybody came running. And now it's closed because everybody has signed up, and you can sign up prior to even writing a contract on the property. So it's a lot of, nicks in it because it's a new program, but I'll let a lender who specializes in that, to break that down for our people.
Yeah, go ahead, Derek.
I got you covered. When you get to me, I'll definitely explain that for you.
Okay, awesome. All right, we'll keep that on the table then. Thank you, sir. Andrea, she's the owner and broker of Haywood Hoosman Realty and also the regional vice president for Region 11. That covers multiple states. I'm not going to run through them again. So the first question to you is on the topic of generational wealth. You lead a Black-owned real estate firm. What strategies do you recommend for families who want to use home ownership as a tool for building generational wealth?
First thing I would say is that obviously in owning my own company is an aspect of generational wealth. It's something I teach. It's definitely something that was taught to me by my parents, and the importance of ownership, the importance of legacy, and creating opportunities. And so what we want to do is educate homeowners of the importance of this is their first opportunity of building wealth when you decide to be a homeowner. And so by providing that educational opportunity, ensuring that the future generations have opportunities is what's most important. What I love is bringing in our young people and making them homeowners up front and in the early stages of life. I'm finding more and more homeowners coming in the right out of college, buying their first home, understand the importance of the comparison of, hey, I can rent an apartment at $1,200, or I can buy a home at $900 and pay my taxes that equivalent to the same thing, but now I have something that gives me an advantage point at the end of the year. And so those are the things that we see within home ownership and the importance of it as a Black company, as well as a Black homeowner.
Thank you. I lost my train of thought. So let's go to the second question. The second one is a community investment. So what does community investment look like beyond buying a home? How can Black homeowners contribute to the strengthening neighborhoods and local economies? And I know that you're an expert in this conversation because of your relationship with the city of Ferguson.
Yes, and that's a great leeway as far as Ferguson, because Ferguson is probably one of the best representations, at least regionally, of a comeback after a setback. Per the Mike Brown situation, when Mike Brown passed away or was killed, being very specific, this neighborhood was destined for failure, quote unquote, because then of course you have the white flight and a community that was majority white businesses, majority white communities immediately start transcending into something else. And now we have become a majority Black or African-American owned business community, along with opportunities for people to become homeowners in this area. So it has transcended, but in a great way. Some of the houses, so at the onset of Mike Brown, the prices went down drastically. So it gave young homeowners or people opportunities to buy into this community at a low rate, but now they started coming back up. And again, the community itself has stabilized. I currently serve as the president of the Ferguson Special Business District. So it's important that we have community investment. It's important that we have all aspects available to us within our community, along with, the time that we put into it, resources that we put into it. All of that's important. And so often in our African American communities, when we talk about what is the blight of our area, well, they don't invest back into our communities, or we're renters versus homeowners. So that impacts our communities. It also impacts our education system. So all of that makes a difference as far as how we look and feel. But as long as we are investing back into it, supporting the businesses that are around it, providing opportunities, both growth and economic opportunities, that's going to make a difference for us. And again, mentoring and bringing things back into our kids, the nonprofits, making sure that they're providing resources to start educating them about financial literacy now, 10, 12, 15 and up, making sure they understand the importance of a good credit score, importance of savings, and building wealth within their own community and within themselves. So those are all aspects. So we have opportunities now within our Ferguson area that we're providing scholarships for education. You identify different projects for programs. We've got resources when it individual communities, Florence and Ferguson. I'm sure we have the same thing going on the Illinois side. And now they just opened up with the 50,000 on the downtown side for St. Louis. Those are reinvestments, making sure we are encouraging people to buy and have home ownership versus rental.
Yeah, I think that's a really interesting point. It kind of makes me think of two things. First, JA, y'all remember JA? And,
Junior
he said-
achievement.
Yeah, junior achievement, right? I mean, the junior achievement is the reason why I got into business, to be honest. Because that was my first taste into what business was about and stuff. And that's been kind of like my drive ever since. And then you think about when you talk about Ferguson, you look at other, predominantly Black communities and stuff, and you're seeing the disinvestment that you're seeing, or investment that's not lining up in certain areas, or not even using the state resources to the fullest extent that we have available, where we have different grants and programs in the state and contracting opportunities that are being underutilized. And so again, the education piece is really powerful, and that's why we continue to do the things that we do for these programs and webinars, is to get the word out and to show that the state and the community can work together in collaboration to help build a stronger, economic platform for our communities.
And that's actually that is actually something as my FSBD board, the Ferguson Special Business District Board, we're going to be doing webinars, doing exactly what we're doing here, but for a full community, educating on home ownership, educating on investing, programs student related that we're actually starting to launch. Because again, key word, we're not taking advantage of funds that have been sitting in the state hands or national hands that aren't being moved down to those communities to make sure we can offer those assets and resources to them.
Absolutely. And then one last point I wanted to add before I turn it over to Markel and stuff is the importance of staying connected within the community. You actually have we don't really touch up on this as a problem with economic empowerment in our Black communities, but it's an intellectual flight. And it's not driven by white flight, it's driven by our own flight, by our own people. So you have people who may get a PhD or might have their medical license or therapist or whatever and stuff, and they're leaving the communities that they serve, or they're not, allocating as much effort and energy. I can always say that if I just focus most of my energy outside of our community, I could probably do way much better performance-wise and stuff, but it's the alignment to, who I am as a person, to the culture, that I can't turn my back just because I was able to quote unquote make it out, right? So I think that you have that going on as well and stuff, because you have people that grew up in those communities and they're not reinvesting back into those communities through homeownership or even creating small businesses, which is an economic driver of 95% of businesses across the country. So that concludes my half of the questions, and so we're going to turn it over to Markel Tolliver. I know he'll do a better job than I did, right? So turn the mic over to you, man.
Of course not, but thank you so much, Dr. T. Turning over to Ms. Pam, who's the Vice President of Housing and Financial Empowerment at the Chicago Urban League. Your work centers on financial empowerment. What financial misconceptions or fears do you see most often among first-generation Black home buyers? And how can organizations better address them?
Well, I think I mentioned one thing is, matter of fact, Ms. Robinson stated it. It's in our minds. It's what we don't believe we can do, and also what we hear. Sometimes there's that information that we're getting on TikTok. Oh, you can, what do they call it? I don't even feed into it, but they always talk about how they can boost their credit score up. Yeah, you can do this, but then what's the effects of it? So just really educating people and finding them where they're at. So some of the solutions that, we've come up with is like, okay, we really need to educate our community. We were trying to meet everybody where they're at, especially the younger generation. So we uh, have a collaboration with Credit Academy, who has an app that talks about uh, different scenarios that you can get into, different educational components regarding financial literacy. So there's a financial literacy app, as well as the Urban League has a financial literacy app. So there are lots of ways that we can break down those barriers, the misinformation, the fear that, oh, someone's going to take my house, or if I miss one payment. That is why we have foreclosure workshops. It's not just to say, hey, buy a foreclosed home, but what it is to say, hey, if you ever get in a situation, what do you do? There are different ways to avoid foreclosure. So our emphasis is on financial literacy, but like I said, we've had to expand to whereas we have to reach people before and during and after. So as a housing counselor, we have to say, okay, where are you at? Because you tell me you tell me what you want to accomplish, but I'm looking at what you have. And as a counselor, I have to tell you the reality. So reality is you can do this, but you must do that. Because see, we want, like just like Ms. Robinson said, when you hit 70,000, oh, I want that free money. Oh, my income, but there's different things. It's that credit score, it's that discipline. So we have a max savings program to help you, get to that earnest money. So we're looking at holistically. So we just don't want to patch you up, say, hey, here's a home, and you get into it, and then we, report out to say, hey, we were able to, get this person a home. We want to make sure, like, okay, you got this house. So now what you gonna do with it? We have a webinar Monday, power of attorney. Now, all of this is free. Now, free information is really what we need to be pressing out. It's free. And when it's free, sometimes it's devalued in our community. It's still that mistrust, but because we're the Urban League, we are a trusted advisor. So that's why we've expanded our services.
Absolutely. Thank you for that. What role do community-based organizations like the Urban League play in closing the racial home ownership gap? And what support do you wish more families knew was available?
Well, one thing we just had at the beginning to celebrate um, the month of June is Home Ownership Month. We partner with different organizations on here. IDA is one of our partners. Citibank was one of our sponsors for our housing fair that we just had at the beginning of this month. So as an organization, we are convener. We offer the different services and programs. We partner. Ms. Robinson did one of our sessions for our home buying class. So we partner with Dearborn because we want to make sure we're reaching everybody and not excluding anyone that we perhaps can touch and change. But as an organization, we're out here boots on the ground to say, hey, we're here. We pop up everywhere. Tonight, I'm at a Wintrust game, you know. I mean, not a Wintrust game, at Sky game, at Wintrust Arena, handing out information. Hey, do you know we're having a power of attorney, workshop? Like, power of attorney, we have to go where everybody is at. So we can't just, as an organization, say, hey, we're Urban League, you got to come. No, we're going out. We're going out where the people, we're meeting people where they're at, and we're having that free information. And then we're also connecting to other people, other organizations like Dearborn, like Citibank, like IDA, because we want to make sure we're reaching the masses.
Absolutely. Thank you, Pam, so much for that and for your work. A common theme I've been hearing is collaboration and support and partnerships. And to that point, as you can see, attendees, all of our panelists are, again, collaboratively working throughout the state. And that's a great segue to our next panelist, David, who is from the Illinois Housing Development Authority. And the first question is about the down payment assistance program that you mentioned. We know that IDA plays a major role in expanding access to down payment assistance. What programs should first-time Black homeowners know about, and what misconceptions do you often encounter?
Sure. Thank you so much. So we offer currently 4 different programs that offer down payment and closing cost assistance up to $15,000 that can be used to purchase a home anywhere within the state. With that in mind, um, these programs can be used with other down payment assistance programs as well. So there's the Federal Home Loan Bank of Chicago's Down Payment Plus program that can be layered with our programs at the same time, as well as other programs that are out there available, including the National Urban Leagues program that is available for down payment and closing cost assistance, which can be layered. With our 4 programs, you do have some requirements that are that you have to have in order to be able to participate. It is a common miscommunication or common misconception that you don't have to put any money into the transaction. You do. You actually have to invest at least 1% of the purchase price or $1,000 into the transaction for our programs. Several of the other programs also have requirements that you have to invest into the transaction in order to be able to participate. So you have to keep in mind that that is a requirement of all the programs. It's also a common misconception that you don't have to have a credit score at a certain level, or you don't have to have any of the other requirements that we have available or required for our programs. So that is something that we try to educate that information through different seminars that we participate in, including the Urban Leagues homeownership program education, as well as other entities within the state that we collaborate with and get the information out. Also, one of the other things to keep in mind is you have to live in the property. So a lot of people think, oh, well, I'm going to buy this house as an investment property and I don't have to worry about living in the property, but that is a requirement of our programs as well. It is important that they get the information as soon as possible so that they can put that in place in order to be able to purchase the home, and it may be allow them to purchase sooner and possibly a little bit more than they would have been able to purchase.
Thank you. What policy changes or statewide initiatives do you believe would have the greatest impact on reducing the racial homeownership gap in Illinois?
Sure. So some of the recent policy changes that have taken place, you may have noticed within the state budget that there was money that was set aside for a couple of programs that we've had before in the past. That includes the Smart Buy program, which actually offers up to $40,000 to pay off student loan debt and an additional $5,000 in order to be able to use for down payment and closing cost assistance. There is money that's going to be set aside for that program. We don't know when that's going to be available, but that is something that has been set aside. It was a very popular program, so definitely get ready for it if it does become available soon, because that money may go fast when, just like it was stated about the other $70,000 program, it could go fast as well. So that is one program that has been mentioned that may be coming back soon. That particular program, you do have to pay off all your student loan debt according to the way that it was written for the last installment of the program. We don't know what the guidelines would be coming forward when it does become available again, but that is something that would be something that people want to prepare for. Also, the Opening Doors program, which is a flat $6,000 the last time it was available. That program may be coming back based upon funding that was put into the budget this year, or the next fiscal year, I should say, um, to be made available for homeowners. That program, the period of time that the money was forgiven over was a lot shorter than our current programs. So please keep that in mind that those are things that may be coming soon.
Thank you so much, David, for sharing that information.
Quite welcome.
Derek, you are a mortgage loan originator at U.S. Mortgage. And as a loan originator, you often meet buyers at the very beginning of the process. What are the most common financial or credit-related issues that prevent Black home buyers from qualifying for a mortgage? And what practical steps can we take to be ready within the next 6 to 12 months?
That's such an important conversation or topic of conversation. So, with pre-approval, the three most important things for pre-approval, credit is obviously number one. Debt to income ratio, which I'll get into, would be number two, and then assets. So let's talk a little bit about credit. So many Black applicants, I feel like, are declined due to the thin credit file that they have. Typically scores underneath 620. 580 to 620 is a very tough range unless you have really good compensating factors. So the goal there would be to start building or actually rebuilding credit right away. Credit consultation and then credit repair with a very trusted credit repair advisor. Obviously, there are some difficult programs out there that don't really get too much done, but those are great opportunities to get things started if you do have credit issues. If credit is down, maybe use an authorized user on a financially responsible family member's credit card. Open a secure credit card if need be to build up the credit if you don't have any. Eliminate collections, pay everything on time. So we have to get people educated on credit because I think that's probably some things that our community definitely lacks. Collections, charge-offs, those can definitely be very detrimental to credit scores. So old medical bills, defaulted loans, late utility bills, that can really take your scores. So what you need to do is you definitely need to get a full credit review, pull all three scores, dispute any errors, maybe reduce balances for credit cards. That's called debt utilization. 30% is good. 10% of the high limit is even better, and avoid several hard inquiries. So developing that strategic debt payoff plan is very important. So debt to income ratio. So coming back to debt to income ratio, or rather known as DTI, it's a basic equation. So that will be your monthly debts that report to the credit bureau, plus whatever this new proposed mortgage would be. We're adding all those debts, and then we're dividing it by your gross income. So that will give you the percentage that the lenders are looking for to get you pre-approved. So one good way to boost, debt to income ratio, you can pay down on your credit cards if that can boost scores. Not only that, but if you can get them down to zero, we can also exclude those monthly debts if they're at a zero balance and stay at a zero balance. The third thing, assets. Lenders always look at assets. We need to make sure that you have enough for down payment, and in some cases, reserve. So start a dedicated homeownership savings account, treat it like a bill. And then I would say one additional thing besides the top three there, lack of documented income. So since COVID, there's been a rise on 1099 income, or what we call gig work right now. This is definitely a form of self-employment, obviously. So if you're going from W-2 to self-employment, know that we're going to need 2 years of tax returns. And then if you're working multiple jobs, that's a tough one. A lot of people pick up new jobs, but they don't realize that you actually need 2 years of congruent work history for both jobs for us to use all of that income. So start filing your taxes now. You don't want to find out that you owe the IRS too late. In the process, you're going to need to set up a plan if you do owe the IRS, and you have to make 3 consecutive payments to that plan. And then obviously the last thing would be 24 months worth of bank statements. Make sure to keep those clean. Make sure that there's no insufficient funds, and also make sure that good income's coming in if you're a gig worker.
Absolutely. Thank you so much for that.
Sure.
Talking about creative lending solutions, many prospective buyers assume home ownership is out of reach because of student loans, limited savings, or the non-traditional income. What lending programs or educational approaches have you seen successfully help underserved borrowers moving from renting to owning?
Well, hands down, down payment assistance. We've all been talking about it. David, congratulations for working at one of the best down payment assistance companies. I think he went over everything pretty well on that. We do have some other smaller municipalities that do down payment assistance, depending on which county it is. And we definitely have a ton on the Missouri side. So, but IDA is a fantastic program, and they have so many different options. So, in addition to down payment assistance, I would say low down payment options. Look for anything that has 0 to 3% for down payment, and then combine those programs with seller concessions, which basically means the seller is paying for some of the closing costs, and you could walk away with coming to closing with nothing, and maybe even getting some of your earnest money back. Another good program. This is a little bit more difficult for someone with issues with credit or anything like that, but bank statement loans, as we talked about the self-employment thing, there are programs. If you don't make like traditional W-2 income, you can do 12 to 24 month bank statement programs. These are outside of the normal conventional loan program types, but typically you're going to need a higher credit score and also a higher down payment. Usually it's about 10%. And then student loan treatment, be aware that FHA and conventional loans have different guidelines in regards to payment plans. So those are called IBRs, or income-based repayment plans. So they're different, but you just want to make sure that you find the right program. That could actually take you from unqualifiable to eligible. And then gift funds. So outside of down payment assistance, if there is an opportunity for families that do have a little bit of wealth, they can get that and transfer that. That's actually a real tool to get a gift from family members or even friends in some cases, as long as it's documented correctly. Never do cash gifts. Cash is not king in our industry. It's going to clip you at some point. And then, of course, education. So home buyer workshops, which NARAB, our organization, does tons of. One-on-one credit consultations and pre-approval prep. I think those kind of sessions are all great to get people moving and remove some of that fear that we've been talking about. So, and replace it basically with a roadmap.
Absolutely. Thank you so much, Larry.
You're welcome.
Panelists, thank you all so much for your work and for the actual substantive information that you all shared. I'll pass it back over to Dr. T to kind of close us out with some closing questions for you all.
Yes, thank you, Raquel, and thank you for the panelists. And before we go to the panel discussions, this is a recorded webinar. So even if you're not in the process of buying a home, share this to your family members, share this with your friends. I mean, this is the reason why we're doing a recording. This is the reason why we, many of us here, volunteer our time, right? To be able to do this, because what you see is passion for each and every one of us. With our individual lens, a collective lens about home ownership, the importance of home ownership, and how it helps empowers our community. We also have some good information as well too. So like when Ms. Stone was talking about, the Urban League and some of the resources, for those who are not in the Chicagoland area, have you reached out to the local Urban League or directed people to those resources? I mean, there are people available. Dave talked about, Mr. Toby talked about, the mistrust and whatnot and stuff. We can help break the mistrust, but we need your assistance more than anything else to, get the word out and just say that there are programs available, such as with IDA, with the down payment assistance programs. And again, that actually helps unlock a lot of potential opportunities for people to get out from paying $1,900 of rent and maybe get a mortgage that's a little bit more affordable at $1,100 or $1,200, because we're not also talking about the rent. We're also looking at the increase in utilities, and that's not anything that we can control. So if rent goes up 20%, utilities go up 40%, then the amount of disposable income available will continue to decrease, which also affects the ability to save for a home. So we are here to serve, and we're here to educate. And so hopefully, like I said, if you're not in a position to buy a home right away, or use small business resources right away, direct the information to somebody else. And said that they had a really great panel discussion that provided a lot of resources and contact. So last questions for the panel, and we'll just take 3 people. We'll go to 3 responses on that so we can close out and give Markel time to talk about the services and also Q&A. The first is collaboration. What does effective collaboration look like between banks, real estate professionals, community organizations, and the state agencies to support Black home ownership?
Well,
That was a little question.
involves all of us. So I'm just going to say that the housing fair that we did, it was a perfect example because we had realtors there, we had all different banks that offer all different kind of services. We also had nonprofits there that offer their services, not only for homeless. So what I'm saying is a collaboration of everybody. So a housing fair is one great way because we're at one place. It's like a one-stop shop. But there's other things that we can do uh, in our community. There's people that host different events. We can always just have a table there. So there's lots of things that we can do, and there's lots of things we're doing.
And it's collaborations with people not only that are on this call, but other organizations outside of this call. I mean, one of the most effective ways in the Black community I have found is to become involved in some of the faith-based organizations. Getting involved in those organizations, they have the same type of housing fairs, education fairs, things like that, a lot of times within their own congregations. And so meeting them at that table and, helping them with those events, showing up at those events. Here in the Metro East, tomorrow night, there's going to be a block party that's going to be at a local entertainment establishment that is minority owned. And he's having a variety of vendors at that event, but the bank is going to be there as one of the only financial institution there, but we're meeting them in the communities where they are. So it's not just collaboration on this call, it's collaboration in all the communities involving all the businesses.
And can I add just a simple blurb for Dr. Duncan and and supporting the Metro East Realtors Collectives. NARAB is the best advocate of bringing collaborative partnerships available to me as far as the African American community. Bringing these resources into one location, one place throughout this country, and specifically in the Illinois area, with them having 3 chapters available to you. So this partnership with this call and any of the other programs we have throughout the state of Illinois is what makes collaboration important, key, and effective.
I would like to chime in too what Andrea said, and she actually read my mind on this, so that's when we know where we hang out too much. But yes, NARAB is basically a one-stop shop. You think of concierge services. You go on a cruise, you got everything right there. You got your food, you got your pool, you got your entertainment, you got your sleeping and all that stuff. NARAB kind of serves in that same function metaphorically because of the fact that we do work with banks such as SCB banks. We work with lenders such as USA Mortgage. We have a relationship and a national relationship with the Urban League as just to kind of name an example of how we bring everybody together. And it's more than just real estate agents. I am not a real estate agent, but I have a passion for economic empowerment. And one of the biggest drivers of economic empowerment is home ownership. So it's natural for me to be there. But we also have, insurance consultants. We also have different people that have different backgrounds, financial advisors, things like that, and different chapters. And that actually helps provide that the ecosystem, if you will, for us. And so if you're on this call and you're not sure, you've never heard of NARAB until today, I challenge you to go and look us up, and also, again, make contact with your local urban league as well too, because they do have connection with different resources. So it just really, organizations such as us and working with individuals and entities like the state, it really is helpful because it helps take away the guesswork. You don't have to ask around and stuff. Just come to us and we'll be able to help guide you. And the other thing I want to also underscore too is it's not really competition, but shop around and see what's the best options. Customer service is really powerful. Dave talked about mistrust. We're here to establish your trust. We want you to have a relationship with us. Yes, we're all empowered by our transactional costs, but we also want to build the relationship costs too. We want you to feel comfortable working with us and take away some of the stress that's associated with buying a home, which is the most major decision that you're more likely going to make in your lifetime. I'm going to skip the second question and just go to the third one so we can have an open Q&A or panelist reflection. So what are the concrete steps that Black families can take this year to move closer to home ownership? And this is open for any of the panelists. So we can go ahead and just go to reflecting thoughts and then Q&A.
Well, I will start. I mean, I think the first step is either, get with a realtist or get with a financial institution to find out where you are and if you're ready. So if you're trying to think about doing it in the next 12 months, don't wait till you're ready to do it. Plan ahead, get in and speak with somebody to find out exactly where you're standing. And then that person can then direct you to the resources that you need or direct you to the organizations that you need. So it's planning ahead and sitting down and figuring out where you are at this moment so you know how you're going to get to the next moment.
I would also like to add, if you are thinking about homeownership, once you start thinking about it, then I think you need to start planning. And planning just starts with simply just attending a home buying education course. Make sure it's a HUD approved housing counseling agency, because we are governed by certain rules as to what is need to be taught during the home buying process. So make sure it's free. It's so much free information out here. And just make sure you do trust and do your homework. Any kind of information you're getting, do your homework, And another part of that is find out where you're at in the home buying process. Because I always tell people home ownership is not a cookie cutter. So just, my sister purchase is not going to be the same as my purchasing power. So you need to get familiar with different terms, vocabulary, expand your thoughts, conquer your fears, and think that, okay, I'm taking a class and I'm going to purchase next month. That's not how it works. You have to prepare yourself. If you're preparing, to run a marathon, what do? You do it months in advance. You don't just do it a month before. So finding out where you're at is first starting with counseling. So we do have counseling services, and which whenever you choose, just make sure they're HUD approved housing counseling agencies, because they're going to give you a client action plan. What is that? And they're going to note different things on what you should do. And just also save, budget, do those simple things, and just consult someone who's doing this as a living.
Yeah, those are great points, Dave and Pamela. I just kind of want to chime in. We just have to lose the fear and just sit down with someone. Doesn't mean that you have to be embarrassed by your situation. We're here to help you. And if they understand that, home ownership is something that everybody should want and need. But if we're too afraid and we think that we can't do it, that's a huge problem. And this has been kind of the mindset for many in our community. So we can get past that hump, just talk to somebody, and don't feel like it will be a critical situation where we're criticizing or basically putting our own opinions on you as folks. We're here to help. We want to see those credit scores go up. We want to see you have the opportunity to do it. You just need the consultation and the education to be able to get in.
And I also want to add, like everyone is stating, that the first step starts with you. So when you decide in your mind that this is what you want to do, that's the first step. Before you go speak to anybody, you have to speak to yourself. Are you ready? That's number one. Number two, I always tell people that there's so many different resources out here, as Pam stated. Sometimes people don't even know what their credit score is, don't have an idea, don't have a clue. It's so many free sites out here that you can just get a general overview just so you can have an idea. I always tell people before you go walk in a bank or anything, and sometimes I know they're doing these soft pulls, as they say, but you at least need to have an overview of where you stand financially. It's okay to do these things at home for free. It is just with the internet and with chat and AI, it is so many different things you could do before you speak to someone. Use those tools at home. Instead of scrolling, scroll for your financial freedom and some wealth. Scroll for that. So it's a lot of things that you can just touch at home, and it starts with you. Are you ready for yourself?
And not even just not knowing what your credit score is, not understanding what a credit score is. I don't think a lot of what we encounter in our communities, I don't think we have people that can teach us that. And definitely it's not within the family. It's not up here for a level of importance. And we need to change that.
Well, we're going to go ahead and make a quick little audible, and I want to thank you to panelists. And so we're going to have the Q&A because we want y'all, for those who are on the panel, to be able to speak freely, and also, you don't want your personal information out there because it is a recorded public forum. So we want to go ahead and thank the panelists for their participation, and then we're going to have Markel provide the closing thoughts. And if you want to stay on for Q&A afterwards, you're more than welcome to do so.
Again, thank you so much, Dr. Terrence Duckett, for moderating this great conversation. Thank you for the work that you are doing. Again, panelists, thank you as well for all of the work that you are doing in your regions and for the state of Illinois and the various states that you work for. Again, it is empowering to hear this conversation during Juneteenth to go ahead and take the first step to home ownership. So again, happy Juneteenth. Thank you all for joining, and please be on the lookout for a recap email with information and contact info to come soon. Thank you all.